Hey guys, welcome to the pod team. My name is AJ.
Hello guys, this is Lex. Welcome back to another video.
Hey
What do we
guys,
have
so
today, AJ?
as you guys know, today is basically Monday. It was the first day of this week's market or stock market. So it was a very volatile stock market. I was actually texting Lex saying that, man, the stock market is crashing. I woke up really early and I saw, the basically the pre-market jump from yesterday. Futures was up a lot, 1%, 300 points on the Dow, 1.7% in the SPY, 1.8% on the Nasdaq. And then when I woke up super early, like 6 a.m., I see at like, from the 3 a.m., the stocks are falling, they're tumbling. And I was like, why is this happening when, the Fed just released some good news that, they were going to backstop SVB and the Signature Bank. So, you're reading upon it and you're assessing the information as it comes to you. And I'm looking at Twitter, there's a lot of people in the lines like trying to take their money out. So maybe that was the reason, the stocks were tumbling and the first half hour everything was just going down and I'm like, "Oh my god, everything's crashing." Me and you were texting and you're like, "It's not looking good." And
Yeah.
then after that, I mean, I bought some calls around that time because when I saw like the stock stabling, everything started spiking up. It just like shot up out of like nowhere. I think the stock market like took some time, some investors to realize. And honestly, I think, you got to know the stock market algorithm because a lot of people I'm pretty sure bought like puts on Friday, like
Yeah.
long-term puts on the market because everyone's expecting the stock market was going to crash Monday because of the banks. But
Right.
within these 4 days, people are saying like it could be like one of the most boringest financial crisis ever because it just happened right like that in one day and then everything's back to normal the next day. So I don't know. What's your take on this morning? Whatever
Well,
happened this morning?
yesterday I was thinking, okay, why is it that it happens on the weekend? Like they close the doors, on the weekend. Uh Maybe it was a plan out to do it this way so people won't go and get their money out. Because on Friday there was a line of people trying to get money out, right?
Well, they closed the bank before it even opened on Friday. So a lot of people actually took a lot of their money out on Thursday, $42 billion worth out on Thursday. And whoever was trying to take some money out on Friday, they couldn't because the banks were closed.
But see, here's the thing though. Banks are so busy trying to tell customers to get them, use the ATM, go online and do this. Well, with the technology that we have now, you don't have to go to the bank, get in line and get your money out. If you have a second bank account, you can just transfer the money
Well,
and skip
yeah.
the line.
So
And
that's what
that's
a lot of people were doing on Thursday.
right. And that's what happened. And that made it worse for this bank.
Correct.
People were not waiting and waiting online
Yeah.
and
And
getting
some
their
of the
money out
transactions weren't even going through. That's what they were saying.
because it crashed. Because there
Correct.
were so many people trying to get the money out through online banking. Maybe they learn not to push that online banking anymore because that's going to backfire every bank when they get in trouble. People's not going to go online. Everybody has a second bank account, not with the same bank, but with a different bank. Most of the people do.
Correct. And looking at some of the bank stocks, uh it was like it was an epic sale going on for like one day. It was like buy them cheap and then you can sell them high. Right now, I think the market is basically stabilizing. They're thinking that uh there might not be any rate hikes coming next week. but
You mean like
actually,
zero, none?
so that's what was happening in the morning. A lot of people were like, "Man, you know what? It might not even have a rate hike. They might even cut a rate hike because of what happened with the SVB and the financial situation because something broke at that bank, and
Yeah,
they're
but I
now
don't
trying
think
to
that's gonna.
fix it. They don't want something else to break.
Yeah, but
But
I don't think that's gonna. I don't. I'm pretty sure they're gonna probably do a quarter minimum.
yeah, so right
Point.
now, if I'm allowed to share the screen, uh, right now, we have traders on Monday that are assigned with an 85% probability of a quarter point rate hike, which is going to happen March 21st or 22nd. So it's very, very important that you guys have those dates locked in. It's going to be a very volatile session. After that, you'll see rate hikes in June. So these two dates will basically show you where the markets are going to go unless if another something random happens or another crisis happens. Now, Goldman Sachs is the only bank that thinks that there might not even be any rate hikes next week. So, with that being said, I mean, if I'm Jerome Powell and I have a responsibility to, you know, fight inflation, and also now I have another responsibility to make these banks survive. I mean, morally, you have a obligation to lower prices for every American because inflation can get out of hand and you can get stagflation. And that's what happened in the 70s. So it's going to be very, very interesting to see what happens and how the market takes it because you might get good news on the CPI data tomorrow and you can have a little small bull run. And then with that bull run, if they raise the rates, it could go back crashing. Now, if they don't raise rates, or if I don't even know how the market can react to a 0.25 basis point rate, maybe it'll probably be flat. But
Probably.
if it
But
goes, if it goes with no rate hike, you might see a big bull run happen. So,
here's the question
mhm.
with this bank. Who do you think is who's to blame? The management at the bank or the government for increasing rate? Because
So,
I'm not gonna blame the government 100%. I don't think that's fair because the management of this bank has something to do with it too.
well, there's a lot of blame game going on. Some people are saying that oh, it's Trump to blame.
He
Uh,
actually signed something.
because he signed a bill that
Yes,
canceled the Dodd-Frank Act. But I mean that has really nothing to do with what these guys did. It doesn't really go with whatever the regulations that were removed. These guys made a bet. Now, uh, what that Dodd-Frank Act did is basically it didn't show any losses. If you have losses, it doesn't show till the bond was up to mark till it's called mark till maturity. You didn't have to show that now. So that's why a lot of people didn't know. Now, uh other things you can factor in is that they didn't have a CRO, a chief risk officer. She quit April of 2022. So they were making all these you know risky moves without any CRO. Now, Jerome Powell has been raising rates, which literally caused all this for this bank to collapse. But if you're a bank, why would you put $100 billion of your assets into one big bet? It doesn't really make sense. Now, even if you did that and the rates are going up and up and up, you should do something to hedge against it. If you're
right.
doing a 4-year bet right here, maybe do like another long bet for something else or a short-term put something to, hedge against whatever bet you made. That's what a lot of banks do.
But why did she leave though, or he leave?
I haven't read into why, but
And why would a bank of that nature go for this long without that position being filled?
see,
When you're
yeah.
dealing with you're not dealing with millions, you're dealing with billions. So you have to be responsible and you have to hire people.
Oh, so they
It
did
needs to be
hire a
filled.
CRO. My bad. They hired a CRO. His name was Kim Olson, but they did it in January 4th, 2023. So they just recently hired him 3 months ago. So I think that's a little too late. Now,
Yes.
when that happens, uh, so when that happens, you also gotta take into consideration that uh now that the government is bailing out the depositors with this backstop, what about the shareholders and the bondholders of this bank? They get screwed. Uh and that's why they're not calling it a bailout. They're calling it a backstop because you're not really helping the shareholders. So you finally get like within today's Monday. So it's like the first actual business day since whatever happened, and you already got a lawsuit. People are already suing those executives. So it's going to be a very interesting couple of months with this whole crisis. It's not going to go away easily. And
Oh,
like the Lehman Brothers when and the Bear Stearns situation that happened in '08, it took a while for other things like the dominoes were falling, but it took a while to everyone to see the effects of it. So right now the markets are trying to get back to normal. They're trying to get depositors their money back. They're trying to get employees paid. So all these things they're doing to get back into, normal. Like they put this fire out, hoping for another fire not to come. So it's gonna be very interesting to see how it plays out.
hopefully, to me, like I said in the other video, the most important people are gonna be is the people who have or businesses who trusted this bank with their money, and likely they're gonna get it. Hopefully.
Oh yeah. So like tomorrow is the CPI. So basically, uh, what everyone is factoring in, it's gonna be at least 6%. Anything above 6%, 6.1% is technically bad. So, I mean, just I say tomorrow 8:30 in the morning, Eastern time. Uh, get ready to see some high volatility, and as soon as the markets open, you'll see like another like high volume day going up, down, up, down. So, like I said, if you're a day trader, this is like the market for you. But if you're a long term investor, you just don't know how it's gonna go. So that's very nerve wracking if you're a long term trader.
So what's better, just to go ahead and wait and not do anything if you're a long-term trader?
No, you could like hedge against like how we talked about opening CDs. Like Discover is giving, I mean not Discover, what is it? Capital One is giving an 11-month 5 percentage point APY. So if you have some money laying around and you want to open a CD, might as well go there. Uh, right now we don't know, the stock market returns aren't good last year, and we really don't know how it's gonna go this year. So might as well put some money in a CD for a while, leave it
Yeah.
alone. And so let me show you the CPI data of last year. So last month, sorry, not last year. Last month was up 0.5%, and the markets did not take that very well. Um, but they were hope. So the next date it's gonna be March 14th, 8:30 a.m. Eastern Standard Time. So look for 6%, 6.1%. Anything above that is telling a hot CPI data. So it's gonna be very interesting what happens going next week then. Is if it's really hot, Jerome Powell, is he gonna continue sticking with what the market is saying, a 0.25 quarter point basis rate hike, or a point 0.5, what he was saying before prior to his meeting? Now, Jerome Powell is a man that like usually stays with his word. And I don't think a lot of people, so that's why like if I show you how the stocks went today, the stocks were trading very volatile as well. So as you can see, like in the beginning, uh the market went down, it tumbled in the morning, and then within a half an hour it just spiked up. Like, so if you're a bear in this market, you're expecting, the market to crash. But like the market is very, very, very confusing nowadays. Good news is bad news is good news. So, it took the market some time to realize that, hey, maybe, we might not even get a rate hike. So, this big surge happened and it stayed standard. But towards the end of the day, you can see the market was selling off. It held this very crucial point. So look for 11,000, especially if you're in the tech sector, 11,100 to be a very strong resistant point. But it did break 11,000. And the lowest it has gone yet is 10,000. I want to say, sorry, let me go further back. The lowest that's gone, it was 10,015 or something like that, close to that. I have it even marked. So that's where a big strong resistance point is. So if it breaks that, you'll know the stock market's gonna crash even harder. So if you're a bear, that's good for you. But right now, uh it's like holding. No matter what you do, a lot of stocks today were, let's see, Charles Schwab. They attacked Charles Schwab's going straight in. Charles Schwab, look at the stock where it was at Friday. It was at 66. It ended at around 58, 57. And pre-market, it you would see a spike, but nothing happened. They attacked Charles Schwab. It was down 20% at one point to like 44, 46, 47. And then this surge happened. And Charles Schwab's team had to come on and say, hey, we have $100 billion liquid in cash. We're good. All our assets are really good. And basically have to make an announcement to make the stock prices go up for their shareholders. So it was a very, very volatile session. Apple and so if you were an uh Apple, Netflix, Amazon, Google, they were all up today. But towards the end of the day, you can see, it had a little bit of sell off. So it's a holding point right now to see what happens in the CPI. If the CPI data is good, I'm expecting Apple to go back to its high point, which it was holding to 154 and maybe even higher. Now, if it goes back down low, look for 146 to fill up the gap again. So these kind of volatile situations make people a lot of money and make people lose a lot of money too. So you want to look at that too going into CPI.
Well, we will see what happens tomorrow.
Yeah, so it's very exciting times and very
It
nerve-wracking
is.
times too, but it just depends on what side you are on.
Well, we will see. Man, can you imagine the Wall Street people how they're nervous right now? Everybody who's trading is like you say excited, but at the same time nervous. It's like when you're watching the game and you want your team to win, but it's losing, and time is almost over. That's what is happening. Hopefully, whoever is making playing their own games, they win, making their trade.
Yeah, I mean, right now it's a very nerve-wracking situation to be in, especially if you have a lot of money in the stock market, uh, especially if you're still holding in the stock market, hoping for your stocks to go back up to its high point. Uh, I would just say turn into a long-term investor. If you really believe in those companies that you hold on to, then just keep holding them, and eventually it should pay off if they have great balance sheets, unlike SVB. And good luck to you guys.
Yes, sir. That's what we need. We need to be lucky and make sure we know what we're doing as well.
So yeah,
And again, man, thank you for another video. That was a lot of information, good information.
yeah. So looking forward, closing comments, I would say get ready for the CPI data. That's going to be very important. Also look for other banks to see what they do. Very important. I have to say this as well. If no bank wants to buy SVB, if no bank is coming in to buy SVB, just look for Jerome Powell to maybe soften his stance, because you have to keep some banks alive, especially a bank like that. It definitely will not survive. It will be a buyout, so just look for that. But again, thank you for watching. Like, subscribe, and share if you really found that informative.
Thank you guys. See you in the next one.
Mhm.